Hi all and welcome to another edition of the week ahead. We can expect a much quieter week ahead of us from the economic data, which starts with Columbus Day holiday in US. However, US equity markets will remain open for trading as per normal. The week ahead will mainly be driven by UK GDP and also US CPI data. The trading week will finish with the release of Chinese trade data. Monday and Tuesday economic calendar is fairly light. On Wednesday at 9:30 a.m. UK manufacturing and industrial production figures are released. More importantly, UK GDP data is due at the same time. The market expectations are for GDP figures to show 0.2% from previously published 0.3%. This data could increase volatility in UK equities and also in sterling currency crosses. Let's take a look at sterling dollar. Sterling dollar appears to be breaking out above psychologically important support at the moment at 1.3050, 1.30. Price action appears to be bullish from the intraday point of view above that fairly important support level, potentially targeting upside resistances towards 1.32, 1.3280, which is signified by the clusters of these two previous highs. Only a confirmed breakout above 1.3280 could open up the way for additional upside resistance retest at 1.3340, 1.34. Alternatively, a swift return lower from the current levels and a dip and a close below 1.3050, 1.30 would negate this intraday bullishness and target deeper downside support towards 1.2935, which is signified by this current low. Loss of that level could open up the way for a deeper retracement towards 1.2820, 1.28 support level. Moving on from the economic calendar, on Wednesday at 1:30 in the afternoon, we are getting US PPI data. Current forecasts are pointing to unchanged reading of 2.8% for year-on-year and 0.2% from previously published minus 0.1% for month-on-month data. This data could impact volatility in US equity indices and also in US dollar currency crosses. Now, let's take a look at dollar Japanese yen. Dollar yen appears to be uptrending, which is further supported by current US dollar strength. Price action is creating the sequence of higher highs and it's currently pulling back to this rising support level, very close to the cluster of these previous lows and also 50-period moving average at 113.55, 113.35. Very, very important support level to watch. Price action appears to be bullish from the intraday point of view above that level, potentially opening up the way for a retest of additional upside resistances, initially at 113.90, 114. Breakouts above that level could open up the way for the retest of additional upside resistances, which are signified by these previous highs at 114.30, 114.55, possibly even 115 on the upside. Alternatively, a swift move lower and end of day close below this area here, which is signified by 113.35 support level, would negate any sort of intraday bullishness, potentially targeting deeper downside support towards 113, which is the cluster of these previous highs and also a round number, possibly even 112.43 to the downside. Moving on. On Thursday at 12:30 in the afternoon, we can get ECB monetary policy meeting accounts. These accounts are closely watched for any signs of change in ECB's economic and monetary analysis and also future monetary policy stance. This data could impact volatility in European equities and also in euro currency crosses. On Thursday at 1:30 in the afternoon, we're getting US Consumer Price Index CPI data is due. Current market forecasts are pointing to an increase of 2.8% from previously published 2.7% for year-on-year and unchanged 0.2% for month-on-month figures. Let's take a look at euro dollar. Euro dollar appears to be under pressure. This is the 4-hourly intraday chart, pointing to a significant upside resistance at 1 spot 1535, 1 spot 1550 zone. Price action appears to be bearish from the intraday point of view below that initial resistance, potentially opening up the way for a deeper retracement towards 1 spot 15 initially, followed by 1 spot 1485. Confirmed loss of those two support levels could open up the way for a deeper retracement towards 1 spot 1460, 1 spot 1440, possibly even 1 spot 14 level to the downside. Alternatively, a confirmed breakout higher and end of day close above 1 spot 1550 would negate this intraday bearishness, potentially opening up the way for the retest of additional upside resistances towards 1 spot 1586, previous high here, previous low here, extended as well. Possibly even 1 spot 1620 to the upside as well. Moving on for the rest of the calendar, for the rest of the week. On Thursday at 4 o'clock in the afternoon, we will get US crude oil inventories. They're scheduled for release a day later than normal due to Columbus Day holiday on Monday. Current market expectations are for the inventories data to show a build of 5.1, almost 5.08 million barrels. Last week, inventories showed a build of 7.97 million barrels. This data will likely impact volatility in WTI crude and also Brent crude futures. Finally, to finish the week off, on Friday at 3 a.m. Overnight in UK, we will receive Chinese trade data. Exports are forecasted to show 10.4 year-on-year from previously 7.9. Imports are forecasted to show 2.8% year-on-year from previously published 18.8, and trade balance data is forecasted to show $19.4 billion from previously published $27.9 billion. This data could likely impact volatility in Asian equities, Asian equity indices, and also in Chinese currency crosses. Stay safe, happy trading, and I'll talk to you soon. Bye for now.